Okay, we are live. Hello, guys. I've got my whiskey. I hope you guys too. And thank you so much for joining me for another week. This week we'll be talking first about Disney Plus and basically how something that I'm excited about is cinema are starting to grow again or return back to normality, and streaming are starting to, these platforms that did incredibly well over the pandemic are starting to just return to normal. And it's quite nice to see all of the platforms wanting to get that Cineworld, that cinema revenue back again. Potentially what could happen is that they need that revenue so badly that they massively push on cinema. So one of the things, there's a lot that's going on. With regards to Disney Plus, with regards to the Marvel Cinematic Universe, with regards to Cineworld paying interest payments on, so the Cineworld bankruptcy filings, audio tapes that have come out this week. We're going to get into all of that. Just going to have another sip of whiskey. I've also tweaked the stream a bit, and I'm hoping it sounds better. I'm really interested in your feedback because I certainly will always be tweaking to try and improve the stream. But yes, first of all, evening. Glad to see so many people joining the Discord and all of that. Okay, so starting the stream, the topics of today. Disney to let 7,000 people go. Now I have, my slide to the side a little bit. Yeah, so I've got a lot of thoughts on Disney firing 7,000 people and going back to focus on streaming. Then I want to go through, I've created a document here, which is Cineworld's debt, and there's a link to it in the Discord, but I'm just going to be going through it on this live stream. It contains all useful links to particular bits of information, so you can get the up-to-date information on what Cineworld's debt is, because obviously knowing about Cineworld's debt tells us what about dilution a little bit when in the event that Cineworld sell the Chapter 11 group. And then one of the things I was kind of keen to talk about, a big thing that I want to talk about, is how we are finally set to see a 2019 slate of films, and we're going to get into why that is so important. I think that it's been understated how much we needed a full slate of cinema, and I think a lot of people, when valuing this business, do not look at how many films were released. So it's such an important thing, because I think people will go, oh, but we had all the big blockbusters. Yeah, we did, but we didn't have the full slate of films. And so we'll be getting into why I think the fact that that's returning and how we're seeing signs like Cineplex, our evil rivals. But I think it's still a good thing to see that Cineplex are doing well. And so that is a good reflection on cinema as a whole. And then the next thing I want to talk about is I saw some discussion about Mookie being a bad CEO or the management of Cineworld being bad. I want to give my take on that. And then the next thing is I've listened to some of the Jan 5th hearings. I've heard some of the people talking about it on the Discord. So I wanted to get into what I think was on them and my interpretation of them and all of that sort of stuff. Meanwhile, I will also be answering questions. I'll take regular breaks to answer questions. If you want to leave those in the comment section, I'm trialing for 1 week and 1 week only. Well, it might go on for other weeks if it pays off, but I am testing allowing non-subscribers to comment in the comment section. So typically before, if you tried to comment and couldn't, it might be because you haven't subscribed. And so I'm really trying to get that 1,000 subscribers, but maybe I should just focus on allowing more people to contribute, and that would help. So that's what I'm trying. First of all, Disney Plus, let go 7,000 people. I want to talk about this. So it's really hard to know what the margins are on streaming platforms, but from what I gather, I really would like to get into the individual margins of each of them, but because they only really have to publish how many people they have on their individual platform, we don't actually get to see a specific revenue breakdown of each individual streaming platform. So if I was to do a valuation of Disney Plus, I would unfortunately have to do a valuation of Disney as a whole. But obviously you can only buy Disney as a whole, so that's all you'd want to do. But we don't really get to do a direct comparison of how streaming platforms are doing versus how cinema are doing, unless we're looking at Netflix versus Cineworld. But yeah, so the fact is lots and lots of really big companies are firing people. I'm sure you guys have heard about it. Google letting go people, Meta letting go of people. The company that seems to be letting go the least people is Apple. Microsoft letting go of a ton of people, and they act like it's to do with they need to save money and stuff like that. Oh, they overhired in the pandemic, and they absolutely did overhire in the pandemic, and they should let go of people. But the best sort of explanation I heard for this, the best example given for it, it's given by another fellow YouTuber. And so I can't remember the name of them, but basically if you are in a really fancy restaurant, so you go out to the most fancy restaurant and suddenly you need to fart more than you've ever needed to fart in your entire life, and this will make sense in a second, then basically if you were to do that and you were the only one, you'd be shunned, everyone would judge you, and obviously you'd be a right weirdo. However, if suddenly everyone in the restaurant is farting, well, now you can blame the food and you can blame the chef, or you can blame some sort of contamination. And that's kind of what's happening now, is all the major companies that would typically like to let go of people, but to let go of 1,000 people would be bad press. Suddenly they can blame the economy, and they can let go of a massive amount of people. So it's an opportunity to fire large amounts of people in a very unethical way and blame the economy. And it's not something that I think these companies have to do. It's just that they have a once in a decade opportunity to do it and to have that make a significant impact on their balance sheet. So I think it's a sort of a bit of a cruel, cutthroat decision, but because some of them are doing it, all of them feel as though they have to do it. And so I think this decision by Disney, they have found a good reason to fire people, and they're using that. So they're blaming streaming, and I think they are probably blaming streaming for good reason. They've seen a drop in the amount of people joining the streaming platforms, but you don't know if they've decided to pull some of their advertising budget for drawing people to Disney Plus. And so anyway, I think Disney would have been looking for a reason to fire people, and this was their silver bullet. And so but the fact remains, I was looking at the earnings because I'm seeing a lot of these big companies. I'm seeing Apple, I'm seeing Google and Meta at prices that I think a lot of people never thought they'd see again. And I've been trying to do valuations on them, but the thing is, it's really friggin' hard, because I look at I don't believe that you can value these companies on their 2020 earnings, their 2021 earnings, and their 2022 earnings because of the bizarre environment that we were in. I think you kind of have to go to 2018 and then apply inflation to 2018 to sort of get an idea of what the baseline business is. And so I actually think that valuations are still high for these companies, and that is why I still don't have a lot of them in my portfolio. I'm waiting for them to come down in price, because I think that they will. It's not the fact that I don't think that they are good value at this price. They're certainly better at value than they were before, but I'm still waiting for them to come down a little bit more, because I think that we're likely going to be seeing that in the next few months, because they're going to be returning to sensible earnings, which the pandemic was just absolutely absurd. Because think about it, just how much, like I worked in an e-commerce business, we were making a killing selling products online, and it was very, very worth our revenue spending money on Facebook advertising, Google advertising, Apple advertising, and now that's gone away. And that massively impacts streaming. One of the industries that was hit way too hard by the pandemic was streaming. Was cinema. So I should have just popped myself into the center of the screen there. So what I'm going to get into now is back to the info slide. And I want to talk about, so Disney want to slash 5.5 billion in costs, which will be nice for Disney. This is what I want to talk about next, because I think it's relevant to what we're talking about. And now, what should we talk about? Debt, or shall we talk about 100% more films in cinema in 2023? More films in cinema in 2023 it is. I don't know if you guys know how many, I'm assuming all of you guys, most of my audience are people that are invested in cinema. If you don't know how many films were released in 2019, this is something that you probably should have been looking at, because it really does illustrate the impact of that it's had on the studios, on production, on the influx of films into the cinema. And so you can see 2017, 2018, 2019, 850, 993, 910. So solid 850 to 900s. And if you go back further than that, it's just all like 800. So there's a slow progression over time, but there's an influx. There's always more films in the cinema. Occasionally it hovers, but then it jumps. Films, a small dip from the previous year, and then 2020 pandemic hit full force. 456 films in the cinema. This is when the platforms start going right. This is people are expecting our revenues to be hit. We are going to go full force on getting people onto our streaming platforms at the beginning of the pandemic. Then you've got 2021, and studios don't know if they're going to be able to do theatrical releases the next year, so they cancel tons of productions and put them off, and whatever productions they do make, they put straight to their streaming platforms, because they're making so much money from streaming. Suddenly streaming is going absolutely crazy, so they're trying to put everything on the streaming platforms, get everyone over there. 2022, there was this illusion that things were back to normal. So by no means were we fully out of lockdowns and stuff like that, but there was a rhetoric that we were back to normal. But if you look at the amount of films that were released, because there was no films being made, really, not on the previous scale during 2021, they were just making the big blockbusters, but they weren't making the other films. And it was incredibly hard for a small studio, a small team, to make a $10 million film that you could then justify a theatrical release that you'd never get. You'd only be able to go to a streaming platform, and streaming platforms do not pay the same amount as cinema does. So then you've got 2022, 493 films released in that. And revenues were way up in 2022. We got to almost 80% revenue with half the films that we had from 2019. And now we are in 2023. And this is where things are getting really interesting. We've had 94 films released in 2023. I'm going to switch to full screen. 94 films in about 1 month. And that is about a week delay on that. So basically that is the month of January. So let's just say that's 100, then 100 times 12. And let's say cut 2 months off just to get a discount. Then we got 100 times 10. We've got 1,000 films set to be released in 2023. I think we are definitely going to hit 900. I think there's a chance we may even hit the first year with 1,000 films released. So, okay, whatever happens to Cineworld, cinema is back. You're seeing streaming platforms finally acknowledging that they're not getting enough money from streaming, not to justify blockbusters. And even, right, if you were making enough money from streaming, why would you not want 2 releases? 1, where people pay to see it in a screen, and 2, when people pay for it on your streaming platform. They're paying the subscription anyway. If it's in the cinema for 40 days, it doesn't affect their subscription, whether they have a subscription with you. If anything, I think more people have gone to Paramount Plus because they saw Top Gun Maverick in the cinema. So I do know people that have got to Paramount Plus, by the way, now. So I think one thing I am trying to say here is this is a time to be those businesses that were impacted by the pandemic. We're seeing the supply chain this is a great example of where the supply chain has begun to improve. It takes a year for the full supply chain of businesses to get back up to regular production. So I think this is the time to look at those businesses that were hit really hard by the pandemic. And cinema, I'm really excited to say, is back in full force. Whether we retain ownership of Cineworld is another topic that we are now going to get into. But this is what I am excited to see, is like this sort of recognition, that validation, that anyone that said, oh, Cineworld did badly because cinema is dead, I'm like, but I don't care. Fuck you guys. No, it's not. Cinema was doing fantastic. It was up every single year. Cash flow, amount of films every single year. Up to 2019, the pandemic is the only friggin' reason that Cineworld is on its knees. Okay, so I listen to a lot of arguments, but that's the only one where I'm like, I will fully just be like, I know that you've not done your research. Right. Feb 8th meeting. Right. Lots to cover. Sound best so far. Thank you very much. I did a lot of work on the sound today. I'm going to move. Oh my God, spilling whiskey all over myself. Moving the keyboard on my lap and the mouse over here so that you can't hear it as badly. So farting is good. Yes, I agree with you, Pam. My girlfriend doesn't. Question: out of all the scenarios discussed, what's your opinion on the most likely outcome for Chapter 11? Okay, so I want to say, like, I posted this in the Discord, and it's just my opinion on opinions before I give my opinion. My opinion on opinions is that it's a bit like showing a picture of oxygen to a drowning man. That's how useful opinions are. So I have opinions on what will happen in the Chapter 11 bankruptcy filings, but to an investor, they are useless because, to be honest, I don't even think the lawyers and the CEO and the creditors know what will happen, the outcome of Chapter 11 will be. And so, okay, this is my opinion. This is what I think, the two scenarios that I think we are aiming towards. And so the scenario one is we sell Regal and UK. So if you don't know, if you go to the K-Roll site, link in the description, go to the K-Roll site, and you can see the list of debtors, and none of them are the Rest of World Group. That's because during the Chapter 11 bankruptcy process, after receiving the debtor in possession financing, they paid off all the debt for Rest of World. So I can't think of a reason that you would do this unless you intended to retain ownership of Rest of World, or if you were preparing for that eventuality. So the first scenario is that we sell Regal and UK, but we retain ownership of Rest of World, and that is our take. And there's tons of guesses as to what the value of that business would be. It would likely have no debt and no sort of, the lawsuit would be passed on to the Chapter 11 group. That's the hope. The theory is somehow, it seems possible that basically we would have no debt, no liabilities, and the Rest of World Group. To give an idea of what the Rest of World Group is worth, in 2017, the revenue was 417 million. And in 2019, the revenue was 511 million. Currently, the business is valued at a market cap of 50 million. So, whether there be dilution and then we keep the Rest of the World and stuff like that, there's so many scenarios. Also, we've got to factor in the fact that I think cinema is doing really well at the minute, because not only do we have the blockbuster releases, but we have the little speckly releases. We have things like, since Avatar 2, we've had Megan come out, and that did phenomenally well. And then underneath Megan, we had the Tom Hanks film that did really well, and they all appeal to different audiences. You know that different people were showing up to the cinema, and people that likely, the more different varieties of people, the more likely you are to sell popcorn and Coke to all these different people and stuff like that. So I think there's a chance that Cineworld's cash flows are doing quite well at the minute. So in that scenario, Rest of World, I would think that you would 4x minimum. I think you'd go up 4x minimum because the revenue would be between 400 million and 500 million plus inflation. I do think inflation is going to positively affect cinema. I do think people spend more today than they did prior to the pandemic. There is a built-in expectation in people's minds that things should be more expensive. And so I think even if we see lower foot traffic, which I don't think there's any indication that we're seeing lower foot traffic, I think everything can be pinned on the fact that the slate was half the size even in 2022. And in the first month of 2023, the foot traffic is higher than it was in previous years. Anyway, getting sidetracked again. So that's scenario one, we retain rest of world. Scenario two is we retain all of it. All of it. We find a really good offer to sell off a large stake of equity for the business, but we retain as shareholders ownership of a significant amount, something like 20% of the business. And in that event, I think, let's say 20% of 100p, because 100p was where we were at middle of the pandemic. So that was like already a suppressed price. If we like a really good bidder comes in, says, I will purchase 80% of the business, leave existing shareholders with 20%, that event would be a suppressed price of around 20p. Third outcome is I am being way too optimistic and we have way too much debt, 6 billion of debt, and the market cap is 50 million, and the creditors come in and do a horrible offer, and I've gotten this all wrong, and we actually end up with nothing. So that is the third terrifying possibility, but that's not a possibility that I really think will happen. It's just the thing I always feel is worth mentioning, because at some point we are going to have an outcome, and I can't say with certainty what that outcome will be. Right, so we're going to switch back to having the screen on, and we're going to talk about Cineworld's debt. Everything I know about Cineworld's debt now, I think, is a good time to be talking about that. One more little sip. And then we've also got, was Mookie a bad CEO, and the Jan 8th meeting. I'm going to I'll talk about the Jan 8th meeting. So just very quickly, because I don't have a lot to say about that. I listened to half of it prior to this. I've created a file with noise reduction. I've cut down the audio, and I've reduced the reverb, and I'll be uploading both of them as YouTube videos, transcribed, but some of the bits are completely inaudible. So on those bits where I can't work out what it's saying, I'm just going to put inaudible. But yeah, most of it you can listen to, and it will be transcribed, and I'll put it on the YouTube channel. But there's been no price reaction to the new these tapes. So one of the things that we can take away from the fact is that this information that is in this, which is public, that the big investors will have listened to live, has not impacted, obviously, their thinking about, they haven't adjusted their prices. And then the second thing is and we've been talking about it in the Discord, it's just all a bit like information that we already know. Cineworld being for sale, it did sound like they were looking for emergency funding, but they gave no evidence, so clearly they didn't want it that badly. Emergency relief is what I think it was, like a sort of a delay. I think Cineworld are constantly just always trying to push for a delay, because I think they are currently, my theory, this is the issue with basically, anyway, so I can only tell you what I infer, but I think Cineworld are always pushing on delays because they are making money again. And so if Cineworld are profitable like they were in 2019, I think they have, I'm about to show you about how much interest payments they have. And their interest payments were small, 40 million, and now they are 100 million because they got the debtor in possession financing that they have to pay. But 100 million interest is not impossible for Cineworld, given the fact that, if you remember correctly, after purchasing Regal, first year, they issued a $500 million dividend. Thank God they still had, after that, 500 million free cash flow. Jesus. If they hadn't held on to that, we would not be in this situation. I think Cineworld just had an absurd surplus of cash, and it would have been really stupid tax-wise to have held on to all of it. That leads me into, what was Mookie a bad CEO? I sort of see people talking about that sort of negativity about, oh, they issued a $500 million dividend. Well, most companies try to operate with as smaller cash flow as possible for that very reason, because you get capital gains tax and all sorts of other things can happen. You get lawsuits. It makes you a bit of a target, like for companies like Cineplex. And so, and with people talking about, oh, exiting the Cineplex lawsuit the way they did. Well, first of all, I question to your law degrees. I don't know how much you actually, the people that you're commenting actually know about it. I know so many people that love football and watch football all their lives, but I know they know jack all when they're commenting about what the manager should have done and stuff like that, and would be absolutely garbage if they were actually put in that position. And so all I want to say is that Mookie, Cineworld, we wouldn't even be talking about it, wouldn't have been able to purchase Regal. It wouldn't have been in any position like this if Mookie hadn't have had continuing success. And even though he inherited this chain from his granddad, it wouldn't have been anything. It wouldn't have been a UK 100 company had it not have been nurtured to an excellent degree. And I happen to think that Cineworld is not just a cinema chain, but actually a really good one. I don't think it's like the peak of cinema. They have the peak of cinema, which is IMAX. I don't think you want every cinema to be the peak of cinema. I think it's more about getting out your house, sitting down, silence, turning off your phone, and having a shared experience with other people, seeing a film that you know other people have seen. And so I think there's only a few films that actually need IMAX, so it's perfect situation, perfect setup is just a really nice, clean cinema that has one specialized screen or a few specialized screens for the films that really merit that experience. So that is what I think is, I don't think Mookie was a bad CEO. I think we would be in a better position had he not have issued the dividend while having so much debt. But they were about to acquire more debt to purchase Cineplex, and they didn't need that money. They had cash. They had a very good amount of cash. We had 4 years, 2020, 2021, 2022, sorry, 3 years of half a slate. 3 years of half a slate. 2022 was not back to normal. It was getting back to normal. So yeah, the fact that they got this far with only like a couple extra bonuses from companies, I think is what you should take away from this. With regards to whether you judge Mookie or not, I think is that's just my opinion on it. I don't think he was a bad CEO. I think, if anything, Cineworld have done impressively well to survive through the pandemic while having an enormous debt burden. If they'd purchased Regal 2 years earlier, I think this would have been a completely different story. If they hadn't have issued one dividend, I think this would be a completely different story. But we are where we are. Right, so let me share my screen and we can get into the last bit of this live stream, which is Cineworld debt. If you're on the Discord, this is pinned in the top right corner. So you go to the Discord and then it's in the top right corner. The Discord is in the description below. So you know where there's like a little bit below a video, it says description. Discord is like the top link in that. I see some of you asking, I will post it in the comment section. If you ask like, where's the Discord? I'll post it in the reply, but that's where it is. It's in the description. And so top right is a link to this document, which is Cineworld debt. It contains information from 3 separate documents, the 8th of September first day presentation, the 30th of September interim results for the period ending 30th of June, and then the 4th of January 2023 Jan case update. There's a bit of debt information in that I think is really interesting. And so this is the information from the June filing. This is how much debt Cineworld had ending June. And I think this is more importantly, this is just like a lesson on valuing debt in cinema. So valuing debt on businesses. So the different types of debt. And I'll try and zoom in. Oh, that's making it worse. And that's making it worse. How do I zoom in to this document? There is a plus symbol. That might help. Okay. Oh, and now I've gone too far. Sorry, guys. 50%. No. 100%. No. 200%. That's the one. Okay. You've got these things here, and you might not know what the different ones are. Damn. 200%. Perfect. So you have bank overdrafts, which is just like your bank overdrafts, except bigger. They are tiny, 15 million. Then you've got unsecured bank and private placement loans, secured bank and private placement loans. I think the unsecured private placement loans are things like, so they get like 1 million kilos of popcorn delivered and they have to pay them 30 days after it's delivered. And things like, oh, they put Top Gun in the cinema, so they have to pay the fees to Top Gun for renting their film, putting them in, so the blockbuster fees. Then the secured bank and private placement loans, that's the important one. That is what we have borrowed from banks to purchase Regal, that is acquiring interest and is making life difficult for us. That is 4.9 billion. So this is all in the millions. You can see that they're secured private interest loans. You've got equity investments. So that's so small. I could guess, but I don't know. And then in this is all finance debt. So there is no capital lease debt. So this is what you want to get out of the thing. Capital lease debt is just like rent payments. So you might see a statistic that Cineworld have 9 billion in debt. They don't. That is only if you include capital lease debt. That debt will actually be less now because they've dropped so many capital leases. That will also hurt their revenue. So it's neither good nor bad unless those cinemas were not making us money, in which case it's fantastic that we dropped them, because then our operating income will go up and our debt will go down. And so getting our EBITDA to equity to debt ratio stronger will be easier. That's an important thing. To get out of Chapter 11 filing, we need to get our EBITDA to debt down. Whether they all factor in capital lease debt into the leverage to get out of it, I don't actually know. So I'm just going to look to see. So this is what it was at. It was at 4.9 billion at the end of June. And then we've got in here, now I've got to zoom out 100%. And we had a finance payment of 490 million for that half a year. So that was for the full year. Debt will be higher since finance expense of 150 million of 490 million. So we had to pay 490 million, but a lot of that was lease liabilities and interest. So 230 million, which will be going down, was what we had to pay to rent. Lease liabilities is the land that our cinema is on. There is a fee there. And some of these cinemas are in such absurd locations where the fee to lease the land that it's on would be absurdly high. But also the big figure, the 4 billion figure, is stretched over many, 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 many years. But it's 230 million. So it does seem like we should be able to cut some of that price out. Like that does seem high. So that 490 million will be going down because of that. But then you've got this interest expense, bank loans and overdrafts. So this is what we need to pay creditors. It's 150 million. So that to me doesn't seem unachievable. It was only the fact that we were in a difficult situation. Then you've got this graph, horribly labeled graph in the Jan filing. So this was about a month ago. And it took me a long time to figure out what this was. This dotted line is when we went into Chapter 11 filing. So that's obvious filing date. And this is how much legacy loan, how much loan interest payments we had not paid off. So we had a tiny amount of money in the bank, no money to pay off loans, and we had 40 million to pay. That's what I'm guessing. Guessing this is all in the millions. And then we weren't able to pay it off, so we had to go into Chapter 11 filings. We got a big loan for which the first interest payment is 100 million. Debtor in possession financing would make sense. Around 20% would be around, I think, 100 million. You've got that here. This is the interest payment that is the first interest payment that's due. So the old debt we can then pay off. We've gotten that down to 18 million. We've still got this interest payment here to pay off. And so the question becomes, can Cineworld pay off 100 million? Which a full return to cinema would mean that they could, but also there's more to getting out of Chapter 11 filings. So that's where we go back to my two main theories earlier on in this video. And I published a video called My Theory and stuff like that. So you can watch the little clips and so you don't have to watch a whole stream. Okay, guys, I think that is most of what I wanted to talk about. I'm just going to take a look at the comment section. Which whiskey are you drinking? The Glen Rose, and I finished this one. finish this one today, so I'm going to be drinking this all evening. The Glenrose, it is a single malt Scotch whiskey, a Speyside single malt Scotch whiskey, 43%, and it tastes oaky and hits the back of your throat, which I like. I don't like my whiskey too smooth. I enjoy a smooth whiskey, but I like it to sort of warm you up a little bit. And so save on energy bills just by whiskey. That's my recommendation, to save in energy bills. Thanks for the thanks for the detailed answer. Yes, terrified. Please stop. Mookie has only made 2 mistakes. 1, he didn't predict a global pandemic. Did anyone outside of advanced AI? 2, he didn't put in a get out clause for the Cineplex takeover. Yeah. Again, I guess he didn't want to get out of that deal. He wanted to purchase Cineplex. And at the time, I think it was an excellent idea. I think it was a really good idea at the time. Perhaps I'm not fully aware of the timings. Do any of you guys know if the 500 million dividend was before or after the lawsuit? Because if it was after the lawsuit, then it was potentially just a really clever move to get money off the balance sheet in case the lawsuit went the wrong direction. And then there would be less money to claim that Cineworld was worth. There's no better than Mookie to run Cineworld. No, I agree. They have 189 million cash on hand at the end of Jan. Wow, if that's true, then their interest payments are covered. The rest of world business is debt-free, blah, 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 blah. Let's see, these aren't questions, they're statements, but they're interesting statements.